Hey guys, welcome into the video. So in this video, I'm going to show you guys what I think is the most underappreciated strategy to do in the stock market. No BS, I think this can pretty much guarantee you 20% plus gains if you play this the right way with little to no risk. Now what most investors do and say the safest thing to do is they just invest in an index fund. So they'll invest in an index fund, let's say VOO, which tracks the S&P 500. So on average, the S&P 500 returns 8 to 10% per year. Now I'm telling you right here, instead of doing that, also have the same minimal risk, but also multiply your gains by 2 to have 20% plus. So in this video, I'll be going through the strategy, how to do this, and how it will return 20% plus per year. So let's get into the video. So before we get into the actual strategy, let's talk about the stock that we use. So in this strategy, I'm using one stock, and this stock has to be a super steady stock, and the stock also has to pay a big dividend. So the stock that I personally recommend for this strategy is at&t. Looking at the stock chart, it's just super steady. In the past month, it has barely budged, and that's what we need. This also almost pays a 7% dividend, 6.98%, one of the biggest dividends on the market, and it has increased for the past 30 plus years, and it's just super steady. It's a healthy company, and they should not be going anywhere anytime soon. So for this method, we're not looking for growth, we're looking for this stock to stay steady, and I'll be telling you guys why in a second. So this method is based off the dividend from at&t and selling covered calls on at&t. So how do we do this and what is a covered call? I'm going to get into some examples in a second, but let's look at the definition of a covered call. So when selling covered calls, you're selling somebody else the right to buy your shares at a specific price, which is called the strike price, and on a specific date, which is called the expiry date. Instead of buying options, you're selling somebody else the option to buy your stock, so you're on the opposite side. So you're on the other side of this equation. You're not buying the option, but you're writing the option and selling it to somebody else who is buying the option. So if you're confused, we're going to get to some examples in a little bit, and that'll clear things up for sure. But essentially, each contract is 100 shares. So let's say you have 200 shares of at&t. You can sell 2 covered calls on your shares. You sell them the right to buy your 100 shares at a specific date, at a specific price, and then they pay you a certain premium in cash. So you pretty much just get the premium. You can use the cash for whatever. You can take the cash out of your account. You can reinvest the cash into new stock. You could buy some more at&t stock with that cash. So essentially, because you have 100 shares, you get rewarded for holding these by people paying you premium when you sell these covered calls. So let's say that at&t is trading at $29 right now. So let's say that we sell a covered call for this Friday for a strike price of $30. So let's say the rest of the week at&t flies and it ends up at $31 on Friday. So when this option expires, you have to sell your shares at $30 because that's where the strike price was that you sold it at. But it's still a win-win situation because first of all, you got paid that $20 for them having the option, and you bought your stock at $29. So you sold at $30, resulting in a $1 gain per share. And also you got the $20 in the premium from the covered call. Now let's have the same exact scenario. You sell your covered call for $30 strike price. It's trading at $29 right now, and let's say on Friday it does not hit $30, it ends the week at $29.90. So the option expires worthless, and in this case you get the $20, you pocket that, and nothing happens to your shares. You don't have to sell at all. So essentially you just got paid $20 for no reason. So this is a strategy that we're trying to do here. We're trying to have our covered calls expire worthless each week, get that premium. Let's say we get $20 per week, we pocket that change, and then we move on to the next week, do the same thing. Hopefully the option keeps on expiring worthless, and if it does not expire worthless, it's still above the price that you bought it at. So you'll sell your stock at a gain, still pocket the premium. So it's still a win-win situation. You can buy back the shares and just keep it going. So if you're still a little bit lost, we're going to get to examples in just a second to just clear some things up if you still have some questions. So let's talk about where the dividend comes in. So let's say at&t stock is steady. It starts the year off at $30 per share and it ends the year off at $30 per share, which is pretty reasonable because at&t is just such a steady stock. That's a solid valuation right now. So let's say that happens. You get your 7% dividend per year. So essentially, you're already making 7% on your money. Now let's underestimate our covered call premiums just in case things go the wrong way. So an underestimate of our covered call premiums is we would get paid $40 per month, which is pretty much $10 per week in premium per 100 shares per option contract, which is 100 shares like I was saying. So $40 per month times 12, that's $480 per 100 shares, which is also equivalent to 16% gains per year. Now add in that dividend at 7% per year. Now look at that, 23%, underestimating what we can do. So if the stock stays steady, you pretty much guaranteed 23% plus, and that was an underestimate. A more reasonable estimate would be 25 to 26% per year, which is very low risk. Like I was saying with at&t stock, very, very steady, not a big chance at a big dip. And also making 23 to 26%. That is not bad at all. You're almost tripling up the average of investing in the S&P 500, which is insane. We got to keep this secret from the index fund investors, guys. All right, I'm going to show you guys a real life example of selling covered calls, and this will be on Robinhood for the example, but you can do this on any broker realistically. It's just easier to show the example of Robinhood. Okay, so I'm looking up at&t stock, I'm going to trade options, and then instead of going to buy call, I'm going to go to sell call. And this is in a scenario where I already own 100 shares because that's the only way you can sell a covered call. So we can say that right now it is August 18th, and this is an expiry for August 21st, which is in 3 days. If I sold a $30 call, right now it's at $29.76. If I sold this $30 call, I would be getting $9 in premium. So I'll be getting $9 in cash. And if it is $30 on Friday, I'll have to sell that for $30 on Friday. Now I could also sell a $30.50 call, which I doubt that it'll get up there, but I would get paid $2 for that, which is pretty much nothing. Or if I'm thinking that it'll go down, I could get paid $35 for a $29.50 call. But personally, I would definitely go with a $30 call because I would probably guess that at&t ends this week in between $29.60 and $30. So I would definitely go with a $30 call, get that $9 in premium. Okay, so let's look at like a 1 month time span. So this is 1 month out. We can see that if we sold a $30 call, which is probably what I would go with, I'm pretty much betting on at&t staying the same price. So I would get paid $52 per month for that. So that's even, like I was saying, the $40 was an underestimate. So $50 per month is absolutely massive. That would be $600 per year, not even including the dividend. So that's insane. We could go to like a 2-week call. This is more realistic because it's midweek. So you could get $22 for a 2-week call, and you'd be selling that for $30. Now, personally, what I've had the most success with is each Monday, as long as the stock is in the green. If it's in the red, I would wait till the next day because you get more premium. But if the stock is in the green, I would sell it per Monday for expiring Friday, the end of the week. That's where I made the most profit. If you can get a green Monday, you can usually sell the call expiring Friday for $15 or so, equaling $60 per month, which would be $720 per year, not even including the dividend. So you'd pretty much make 30% plus on your money if you did that per year. We'd probably realistically average selling these calls per week, probably about $50 per month, which is $600 per year, the first example that I was saying. But we can just look the different options that you have. We could go to like a farther out option, October 16th. Today is August 18th, by the way, like I was saying. So you can just see the premiums that you'll get. So you'll get $78 for selling an October 16th $30 call. Now we can just see how much more beneficial it is to have a 1 week time span call. So we go to August 21st. I'd rather get paid $9 every week. We can see that it was down 10% today. So yesterday it was trading for $10. The day before it was probably about $12. So like I was saying, we try to sell these on the green day because that's where you can maximize the premium that you get. And just think about it. You can do this with any stock in your portfolio, which I'll be doing a later video on, just how to do covered calls overall for like a long-term portfolio. But this is guaranteeing yourself 20% plus returns as long as at&t stock doesn't tank. But we can just take a look at at&t stock and I'll show you guys how steady it is. There is a very, very low chance that this stock tanks, which is the only risk. So we can see in the past week, it's down 1%, down 32 cents. That is not going to hurt you in the least. The past month is down 0.23%, down 7 cents. Very, very steady. In the past 3 months, it's up 2.37%, but we can just see it's pretty much going up and down the exact same, of course, in the past year. But ever since the big dip, it's been steady. So that's all we need to see right there. And we can just see overall it goes down and then it goes up. And of course we had that big drop off because of the pandemic, as we know, but it should stay in the $30 to $35 range. I'm thinking it did hit highs of $40 and last year's actually $38 hit highs of that. So we could get back to there. That's possible. Now I'm not expecting that. I would predict that this ends the year at about $32. I'm not expecting much growth, but all we need is a tiny bit of growth or staying steady and just get that big dividend payment. As we know, now it's about 7% dividend. So we get the premiums, we get the dividend payment. This is just money. This is a great strategy if you're looking to be safe and just get solid 20 to 30% gains in your portfolio per year. As long as at&t stays steady, I would put a 95% chance that this stock does not drop below $25 to $24. I would not expect it to drop below that, which realistically that would be the only thing that would actually hurt you. So as long as you know what at&t does as a business, as long as you're confident that they're not going to lose all their business, Now, of course, cable is slowly going away, but at&t is innovating. They're doing some new business models. They have an HBO membership going. They have some new things that they're working on to just keep up with the current environment. So yeah, I'm not expecting this stock to go anywhere. And as we can see, it's just very, very steady the past week, the past month. You could have like 5,000 shares of this, sell 50 contracts per week. That's $500 per week if you're selling a $10 contract per 100 shares. So think about that for a second. $500 a week, multiply that by 4 to equal 1 month. That's $2,000 per month. Multiply that by 12 to equal 1 year. That's $24,000 per year, which is almost a full-time salary, which is absolutely insane, guys. So this is a strategy that I'm looking at as my safe strategy. It's pretty easy money in my opinion. And yeah, I hope this example makes sense to you guys. So guys, I hope your mind is blown from this strategy. Okay, anyways, in a couple days, I'll be sure to release a full video on covered calls. I would like to go deeper in this and get you guys some more strategy. I also want to bring up the wheel strategy, which also covers cash covered puts. So we'll go over some cash covered puts in a later video. I want to have those 3 videos out pretty soon because I believe that these strategies are some of the lowest risk and pretty high reward if you just keep doing this consistently, if you get a great strategy behind all of it. So I do want to let you guys know. I want to let you guys know my personal strategy on this and my plan as an investor using cash covered puts, covered calls, and the wheel strategy overall. Now I decided instead of doing the trading challenge on this channel, I'm going to be doing the Robinhood challenge on my second channel. Feel free to go check that video out if you're interested. Now on this channel, I'm going to start up the building a portfolio challenge where I add $500 to $1,000 per week and just slowly build up a portfolio and show you guys my gains and losses every single week. I think that'd be very beneficial because right now it's very hard to trade penny stocks. As you guys know, you're probably experiencing this with me. Sometimes you got to stand back from the market and just stop trading, and investing is sometimes the smartest option. Now, of course, I'm still trading, but I'm not doing it as heavy. Probably like 90% of my portfolio right now is holdings and longer swing trades, and the remaining 10% of my holdings are all just very short term. So instead of what I would be doing in a bull market, which would be 50-50 trading and 50-50 investing, just half and half, I'm leaning more towards investing because it is way safer. And right now, there are just not too many opportunities to be trading. So we do have to be patient in this market and just wait for opportunities to come to you. If you're interested in joining the private stock group, the link is down below. Now, a new affiliate that I have in the description is $10 free in Bitcoin on Coinbase. Hey, it's always good to diversify into some crypto. Also, 2 free stocks on Webull if you're interested. And also $5 free on Acorn Investing. You can't go wrong with free money, guys. Please subscribe, like the video, comment if you have a question for this strategy. And thanks so much for watching. Thanks for all the support. Let's get rich.